Thanks very much, Fred, and thanks everyone who's come today. The title of our paper, Jeff and I and others helped, is Will the World Trade Organization enjoy a bright future? And we have a surprising yes, but it's a conditional yes. And the yes is conditioned on the WTO learning from today's realities and yesterday's mistakes. So the realities of today, the world is very much a multi-speed affair in terms of the willingness of countries to liberalize and their capability to address new topics, the kinds of things that Chairman Brady spoke about. Secondly, as everyone knows, China has crashed on the trade scene like kind of Arnold Schwarzenegger, I'm back. But China's back from the 17th century in terms of its importance in the world economy. Those who follow history know that China was a very important player several centuries ago, and now it is a lead or the lead exporter. And the third is that there's intense competition in every industrial sphere, almost every sphere of economic space, which means that reciprocity rules. Free riders no longer, and certainly not the BRICS. So those are the realities which are much stronger today than they were when the Doha round was launched. Now, what about the mistakes from yesterday? Well, the new realities mean that two cornerstones, I'd even say three cornerstones of the Doha round turn out to have been bad mistakes. Maybe it wasn't seen at the time, but in retrospect. So the first is the single undertaking. Nothing is agreed until everything is agreed on every subject. Secondly is the consensus rule. Nothing is agreed if one member objects. Now, of course, in reality, it's not one member objecting, but a very small coalition of countries, 10, let's say, out of 157, can block the agreement. And the third cornerstone, which is not as firmly written as those two, but has been there, is this concept that the noblesse oblige of the multilateral system should fall, the weight of that in terms of generosity should fall on countries which are rich, are advanced countries, but not necessarily on countries which have big and persistent trade surpluses. That's kind of the unspoken rule. So that means it's supposed to fall on the US, European Union, Canada, Japan. Of those, the only one with a big and persistent trade surplus is Japan. And that unspoken rule means that the BRICS, which have done tremendously well in terms of trade surpluses in the last decade, they should no noblesse oblige on their part. So, looking at those realities and mistakes, my colleagues and I came up with a grand bargain. First, there are some, even in this room, who would like to just take what's on the Doha round agenda and throw it in the trash can. The problem with that is that there are about 100 members of the WTO who really like elements, or in fact large elements of that. These are mainly medium-sized and small countries, but they're very unwilling to throw it in the trash can, and they're very unwilling to think about doing anything new if all that stuff is put to one side. So we think that what we need is a two-part bargain, and the first part is acceptance of the packages which are largely negotiated in the Doha talks, and even acceptance of those packages by countries such as the United States, or maybe principally the United States, which find those packages unbalanced and unappealing. So what are the packages that we would put in this, what we call 5 easy pieces? Trade facilitation, mentioned by Congressman Brady, that is hugely important to business. It has a logic all of its own. It's as close to a win-win proposition as you can get. It should be broken out, and there possibly we might get some progress on that out of the G20. Secondly, duty-free, quota-free for least developed country exports, about 69 countries there. Third, elimination of agricultural export subsidies, which was pretty well agreed a couple of years ago, and the numbers are not very big. Fourth, restraints on food export controls. Now that prices are once again ramping up, we might face that danger of countries exacerbating the problem by putting controls on. And fifth, improvements in the dispute settlement system. I won't go into the technical details, but there's some fairly easy improvements there. Now, the big elements in the Doha package we would say should be accepted in close linkage with the second part of the grand bargain. And those two elements are the non-agricultural market access, the NAMA, and agricultural market access. But those only to be accepted linked to a new deal on plurilateral agreements. And that is the second part of the grand bargain in our conception. And what we envisage is approval by the WTO membership, technically approval by 3/4 of the membership, for like-minded countries to negotiate plurilateral agreements between themselves akin to the Tokyo Round Accords, the codes in the Tokyo Round. The agreements would address unfinished business in the Uruguay Round, and they would also address new 21st century issues. Now, each of the plurilateral agreements which we envisage would have unique features, but they would face 3 common challenges. First is the question, which we've answered, whether these new plurilateral agreements should be inside or outside the WTO. As you know, the anti-counterfeiting trade agreement is an agreement recently agreed. It's still under discussion in Europe, which is outside the WTO. We think inside the WTO is better for 2 strong reasons. Inside the WTO paves the way for the kind of entry of additional members that Congressman Brady talked about in the context of TPP. We're talking about it in the context of the plurilateral agreements. And secondly, inside the WTO facilitates, automatically takes advantage of the crown jewel of the WTO system, which is the dispute settlement mechanism. Now, of course, that could be reinvented elsewhere, but that would take a lot of work, so why not take advantage of the one that is there and is working well and can use some improvements, but not major improvements. So that's the first common issue for any plurilateral agreement going forward. The second is whether the rights are extended only on a conditional most favored nation basis or are unconditional. And here we are very clear. I pretty much made this same talk in Europe a month or so ago. There's some discussion in Europe. I think it's come down the right way. We argue that unconditional extension of rights to large countries which remain outside the agreement, so we can put names to them, China, India, Brazil, South Africa, Indonesia, that's a showstopper. That's a killer. There's nobody in this town, up in Congress, or probably not in some other capital cities, who's going to give free rider status to these countries which have not taken on the noblesse oblige that they ought to have done, and to give them more free rider advantages would be a joke. So now there might be a different story for the true LDCs. The true LDCs, about 69 countries on the UN list. They don't account for a very big portion of world trade, a couple of percent. If there is a strict graduation clause, that's another story. But it's these middle income countries which cannot get unconditional MFN rights to the plurilateral agreements in our view. Now, the third issue that faces any plurilateral agreement is how big should the coverage be in economic terms before you go forward with it. And we argue for a test, we won't put too many numbers on it, but a test which is something like substantial coverage. And if I put a number, it would be 50% of the affected trade or the affected components of the economy. So my colleagues would put a different number. But this is much less than the so-called critical mass concept. The critical mass concept, which was invented in the post-Uruguay round era, came to mean about 90% of trade. So 90% of trade, that's China right there, that's India right there, that's Brazil. You don't get 90% unless you have them in many subjects. And again, if you insist on a critical mass, you have a showstopper. We don't go with the showstopper approach. So in our paper, we identified a number of possible plurilateral agreements, all with these common features, and we discussed them at some length in the paper. I'm not going to go into that now, except just to tick them off. The first and foremost, which my colleague Brad Jensen will speak about, is, of course, an international services agreement, which is going forward right now in Geneva, and I believe the European Union has agreed to the conditional most favored nation approach on it. There's still a very heavy discussion on positive versus negative list, but that one is underway. There are other possibilities, and certainly the Information Technology Agreement, or the IDEA, which is another acronym for it, is moving forward, and that's quite hopeful. But there are others that we would mention, but this is not an exhaustive list. Currency undervaluation, now that China is closer to the mark. Bill Klein says within 5% of the mark. Well, maybe it would be easier to start talking about that in a WTO context. Climate and energy, there are a great many open issues on what are appropriate energy subsidies, appropriate energy policies in terms of the trade, starting off right away with the EU Aviation Directive, which bites on January 2013, and zero for zero tariffs in a number of sectors, which didn't get any traction in the Doha round, chemicals, some environmental goods and services, and others. That's certainly a possibility. And another one we would flag would be state-owned enterprises, which is a big issue, a global issue, and is being addressed in the TPP, but it goes beyond the TPP in terms of how they interface with privately owned enterprises. So those are some we would suggest. Our conclusion is that without a radical change along these lines in the way the WTO does business, it is defunct as a forum for negotiations. Now, it's still active in terms of trade disputes, but the longer the time span between the negotiations, the last agreements, and the current disputes, the more weight is put on the appellate body, and at some point that could prove to be unsustainable. Of course, the alternative to a revived WTO is to put all the weight on the big regional pacts which are underway, starting with the TPP, possibly a transatlantic, and others. But we think there are a great many issues which cross-cut across all these regional agreements and pull in countries which are not part of any regional agreement and are properly addressed in the WTO through a plurilateral approach. Thank you very much.
Morning, I'm Brad Jensen. I'm going to spend the next 15 minutes talking about why increased attention to services trade makes sense, why an international services agreement within the WTO is a useful step towards increased services liberalization, and then talk about several key elements of a desirable international services agreement. My remarks are going to draw on my book, Global Trade and Services, and also a recent policy brief that I did with my colleague Gary Hufbauer and Sherry Stevenson at the Organization of American States. So the rationale for why services trade is important, and I think I still need to bring this home, is the United States economy is a services economy. Okay, business services, the business service sector, which is things like the information sector, which is software and telecom, finance, insurance, professional, scientific, and technical, so think accountants and auditors and attorneys. That accounts for 25% of employment in the United States. It's 2.5 times the size of the manufacturing sector. In addition, it pays wages that are, on average, considerably higher than the manufacturing sector, more than 20% higher. Okay, so this sector warrants policy attention. Not preference, but policy attention. Okay, business services. And in many of these business services, many of the industries within that sector, most of them are tradable. Okay, and much of the employment in that business service sector is in tradable industries. In fact, by my calculations, there is more employment in tradable business services than in the entire manufacturing sector. So I think, again, this warrants policy attention. Okay? When we take a closer look at the workers in these tradable business services, we see that they are qualitatively different than workers either in the manufacturing sector or workers in non-tradable business services. They have much higher levels of educational attainment. The share of workers with a college degree in tradable business services is twice that of the manufacturing sector. It's almost twice the level in non-tradable business services. If you look at advanced degrees, it's more than twice as many workers. So these are highly skilled, highly educated activities. Okay? And they garner high earnings because of these high skill and high education. These types of activities are consistent with U.S. comparative advantage. Okay, the U.S. has comparative advantage in these activities. We have internationally competitive service firms. Okay, and that's evidence, the easiest evidence is that the U.S. runs a persistent trade surplus in services. Okay, most of the growth in U.S. service exports is accounted for by the types of industries that I refer to as business services. Okay, indeed, the surplus, the U.S. surplus in services, it's triple what it was 20 years ago. Okay, so this is consistent with the notion that the U.S. has comparative advantage in these activities. And there appears to be a big opportunity for mutually beneficial trade. If we look at some of the large, fast-growing markets in the world, we see that they are relatively underendowed with services capacity. If you look at China and India, this is services overall, not business services, but just services overall. You see that their service sectors are half the size of the US or the UK. Okay, so they're relative, and if we looked at business services, it would be even a bigger disparity in terms of their capacity to deliver these crucial intermediate inputs to other sectors of the economy. Okay, so these countries should be big demanders of advanced economy business services. Okay, so again, an opportunity for mutually beneficial trade. Yet in spite of having comparative advantage in these activities, and there appearing to be a large market for business services, engagement in the global economy, particularly export activity by U.S. service firms, lags the manufacturing sector. If we look at it in terms of the share of business service firms that export, it is about a quarter, a fifth of the share of manufacturing establishments that export. So 1 in 4 manufacturing establishments exports. In business services, it's only 1 in 20. If we look at the share of output that is exported in the manufacturing sector, about 20% of output is exported. If we look in tradable business services where the U.S. has comparative advantage, less than 5% of output is exported. Okay, so this looks like a huge opportunity. Okay, and a big question is, why the under-engagement and export activity? If we have comparative advantage, we have a lot of capacity, we have globally competitive service firms, why aren't more of our service firms engaged in international trade? And here we come to, it could be language, could be culture, but I think it also could be policy impediments. So this is work done by the World Bank, which shows that, if we look at impediments to services trade, the advanced economies, the United States and Western Europe, are all at the lower right-hand side. Okay, they have relatively low barriers to services trade. If we look at the countries that have relatively high barriers to services trade, it's India, the Philippines, Indonesia, China, Russia, and Brazil. All have relatively high barriers to services trade. So to me, this looks like at least a potential explanation for the low engagement of service firms in exporting. And I think this needs to change. In addition, there is a huge infrastructure boom underway in the developing economies. Okay, by some estimates, $40 trillion will be spent over the next 2 decades on infrastructure around the world, most of that outside the United States. Okay, this is exactly the kinds of projects that require tradable business services. Okay, we need to liberalize so that the developed economies can participate in providing the key intermediate inputs to these infrastructure projects. The fact that it's infrastructure, government procurement practices are also important. Very similar to that picture that I just showed in terms of services impediments. When we look at the government procurement agreement, all the developed economies are signatories to the GPA. None of the BRICS are signatories to the GPA. Okay, so we want to change that situation. Okay, the potential to put a scope on it, this is potentially a big deal. If you could imagine circumstances under which the exports to sales ratio in services approached the export to sales ratio in the manufacturing sector, lots of reasons to question why, how valid that might be, but just to scope it, rough back of the envelope numbers, it would generate about $800 billion in additional US exports. That's a big number. Okay? That's just a rough thought experiment to put a scope on it. So I think that this is why we want to give additional attention to services negotiations, why we want to open up these large, fast-growing markets to US, EU, Canadian, Japanese service providers. So where do negotiations stand? Okay, we had GATS signed in the Uruguay round, right? I think now with several decades of experience, we see that the architecture of GATS was flawed, right? The positive list approach in a very dynamic sector probably is a mismatch. Okay, when we look at Doha, again, a decade of frustration, right? Only a third of WTO members presented an initial or revised offer during a decade of services negotiations. The offers rarely even matched existing practice. Okay, so, the de facto, we have had a plurilateral negotiation in services. Okay, so the services liberalization has largely moved to regional trade agreements. Okay, we think it makes sense to try to engage a broad range of countries in services negotiation, but this is proving difficult. So a way forward is to work with, this is, an international services agreement with like-minded countries is not the end, right? It's a step along the way. It's a means to an end of trying to engage the large, fast-growing emerging markets. Okay, so a way forward is a plurilateral agreement on services, an international services agreement, a self-selected group of countries, an agreement that's consistent with Article 5 in the GATS, and our preferred outcome would be that this, as Gary described, this plurilateral would be attached to the WTO, would be approved by 3/4 of the WTO members and brought into the WTO as the government procurement agreement was. Some big advantages of bringing this within the WTO is, as Gary described, access to the dispute settlement mechanism. That's very important. It would be presumably easier to join, and it would strengthen the WTO. As an alternative, if it was negotiated in a manner consistent with Article 5 in the GATS, it could just be notified to the WTO. This would be a second best to a second best, but it would be a possible way forward. So that would be our preferred path forward, in the hopes that this would generate interest by emerging markets to join. Some key elements that we think are important in a revised services agreement would be, first and foremost, a negative list approach. Okay, in a rapidly changing dynamic market, a positive list approach can stymie trade. So we think a negative list approach is important. Second key element is conditional MFN. As Gary described, something that is bedeviled this is free riding. So we think that it is important to create, some skin in this, so that if you want to play, you need to be in the agreement. You need to, to pony up. Another key element would be to aim for mode neutrality, right? In these dynamic services delivery, it's not clear, is it cross-border? Do you want commercial presence? Is it mode 1, mode 3? Do you need some mode 4 to make that work? So we would prefer an agreement that was neutral with regard to mode. And we see that enhancements and obligations on mode 4, the temporary movement of natural persons, would also be a key element to this agreement. Okay. Other key elements: renegotiate some of the existing elements of the GATS, particularly government procurement agreement, the relationship of regulatory policy to the trading regime, how government monopolies are treated with respect to trade in these contested service markets, and then mutual recognition of accreditation and licensing issues. And then we see other newly emerging issues that would also be productively engaged in an international services agreement. This is related to the government monopolies, how to deal with state-owned enterprises, directly addressing the issue of cross-border data flows, right, and newly emerging impediments to cross-border data flows. Want to put into place commitments on that. Forced localization and investment protections are also key elements that are important in a new agreement. So in terms of, as Gary mentioned, there is impetus behind this. Okay, currently 18 WTO members are discussing this: the US, the EU, Australia, Canada, Chile. You can read the list. These countries that are self-selected participants in this account for about 3/4 of global services trade. Okay, this isn't critical mass at the 90% level, but it's well above Gary's notion of substantial or significant at the 50% level. Okay, also hope that we could get a number of larger emerging markets with profiles that would be amenable to increased services trade. Places like Indonesia, Egypt, and even Russia, where they have what appears to be nascent tradable service sectors, particularly Egypt with its large amount of college-educated workers who are largely underemployed, to create some trade diversion, to be quite honest, right? To create interest in the Indias and the Philippines to participate in this agreement. Again, the idea here is to pursue a high-quality international services agreement, get it in place, and then hope that the large, fast-growing emerging markets will join. So to wrap up, the time is right for an international services agreement. Many business services are tradable. There are large opportunities for mutually beneficial trade. The impediments to services trade are relatively high in these fast-growing markets, and we need a mechanism to engage them. This ISA is a first step in that way. That's WTO strengthening, and will hopefully engage the large emerging markets in a conversation. Thank you. I don't know, will it?
Thank you very much for having me, and it's a great pleasure to be here. This is, I'm going to speak on the China round, which is, based on a paper that Aditya Mattu of the World Bank and I have written, which has been circulated. But let me say that listening to my brilliant colleagues, Gary and Jeff, and some of the questions, I feel like Rip Van Winkle because it feels like I'm in the WTO or the GATT in the late 80s, early 90s, rather than in the United States in an economy in 2012, which is very, very different from what things used to be. And my central message is going to be, this is a different world from what anyone here in Washington imagines it to be. Let me explain. So the overview is that I'm going to tell you why multilateralism is important. I'm going to be a little bit of a kind of party pooper and say why efforts like the Trans-Pacific Partnership are not the way forward, or at least we need to seriously rethink whether that's the appropriate way forward. I'm going to spell out what some of the openings are for this multilateralism, and then say a few things by way of practical next steps. But first, I want to remind you of the centrality of China. It is today the world's largest economy in purchasing power parity terms. It is the largest exporter. It is the largest creditor and has the money bags. And it is the most diversified exporter, which is something that you might not know. In a recent paper that Aditya Mattu, Prachi Mishra of the World Bank and I have done, we actually calculated an index of competition of the world's largest non-oil exporters. China, it turns out, is has the biggest index of competition compared to any other countries, which is a manifestation of how diversified an exporter it is. China and the US are equivalent in terms of absolute size, but in terms of breadth, there is just no comparison. So one might jokingly say that China is the only exception to the Adam Smith, David Ricardo theory of comparative advantage, because it seems to have comparative advantage in all sectors. Second, not only is it the largest economy, most of the big trade frictions around the world today involve China, whether it's the exchange rate, whether it's export restrictions on rare earths, whether it's government procurement, IPRs, anti-dumping. China is centrally involved. And I want to emphasize the point that it's not just frictions between the US and China, but many of these frictions also involve other developing countries in China. So China is not only the biggest economy, is also an economy which creates the greatest concerns around the world. And of course, tomorrow, all these numbers about the largest economy, the largest importer, the largest, most diversified exporter, et cetera, will only increase in China's favor relative to the United States, because China is going to grow faster than the United States by about 3 or 4 percentage points per year, depending on how optimistic or pessimistic you are. So going forward, China is absolutely central to the trading system, unavoidable, bigger than the US, bigger than any other country in the world, and generating all these trade concerns. Point number 2, but why multilateralism? I think one thing that people haven't woken up to is that going forward, China has the mercantilist bargaining power. It not only has the biggest markets, it also has the most restrictions. So in some ways, the United States enters the negotiating chamber half naked because it's so open. It has no chips vis-a-vis China and many other countries. So in a mercantilist framework, which is what the reciprocal trade liberalization framework of the WTO is, China has all the bargaining power, and it will continue to have so going forward. So that's kind of a negative reason to think about multilateralism. I would say the positive reason, of course, is the fact that China and the multilateral system, both in terms of accession and in terms of subsequent dispute settlement, it's been pretty successful. China, by and large, China has been brought to dispute settlement a number of occasions, and by and large, it's been adhering to these obligations. We shall see, but at least we have no reason for concern. And I think so. Multilateralism is kind of the way forward in dealing with China, both because it's central and because China has this bargaining power, and other countries have less and less leverage individually or even collectively to exercise vis-a-vis China. Let me exemplify with the case of the Trans-Pacific Partnership. There are 4 scenarios in the Trans-Pacific Partnership. 1, the TPP without China. I say this is Hamlet without the Prince of Denmark. You want to negotiate free trade with Brunei and New Zealand? All power to the United States. Please go ahead. Fantastic. But this is not what I think we're really talking about. Scenario number 2, TPP as open regionalism. I.e., to be fair to the United States, they say, well, we negotiate these things with Brunei, New Zealand, etc., and China, this is the conditional MFN of Gary Hufbauer, provided you adhere to the obligations, you're welcome to join. But I mean, do we really think China will sign on the dotted line that it has not been part of? I mean, let's get serious here. Third, TPP with China, and I think that's an interesting possibility. But my argument would be is that because China is so big, we need much more multilateral heft on the other side of the bargaining table when the rest of the world has concerns about China. So is it really better to restrict ourselves to US and ASEAN, maybe Mexico, rather than also having the EU, Japan, and Brazil at the negotiating table? So when I briefed President Obama before his trip to India, my message was, the exchange rate is very important for the US. It's also very important for India and Brazil. So why not make common cause and have a multilateral approach to the exchange rate? And that argument applies as well, vis-a-vis TPP. Fourth scenario, TPP as kind of hostile regionalism. China is certainly interpreting what the pivot to Asia as encirclement. Now, but remember, with China, China can retaliate. It can retaliate free trade agreements in Asia, and it can repay, pay back in a coinage that can be very hurtful. If China negotiates free trade agreements and excludes the United States, there's going to be a lot of trade diversion because China has very high trade barriers. So do we want a world where China retaliates with regionalism and leads to a fragmented world, a fragmented trading system, which is what happened in the interwar years? So I think the deeper point is this, that the Bergsten-Zellick hypothesis that bilateralism and regionalism led to competitive liberalization could be building blocks towards multilateralism. That logic, I think we need to revisit because we are not talking about Colombia and Mexico and Brazil on the other side. We are talking about a China that is very big, that controls the levers, and that has a lot of heft, much more than many other countries individually. So I think that's a fundamental reason to revisit or to rethink a TPP. Okay, but then that's easier said than done. What about, how do we get China interested in a China round or multilateralism? And the argument here, of course, is that if you can't do Doha, China and India obstructed Doha, if you can't do Doha, how can you do something more ambitious? The answer is very simple. The answer is that the narrative in Washington that Doha was scuppered because of obstructionism by China and India is only half right. It is not completely right. The other half is the fact that the Doha round was in some ways never had the excitement, the enthusiasm of the private sector in the United States and the European Union because it was too small. There was nothing really big at stake for the US private sector. And in some ways, the problem is that the Doha agenda is too small and not very relevant to the current trade concerns facing the trading system. And there is the other dirty secret, of course, which is that the Doha round was in trouble also because other developing countries did not want to open up to China because in some ways the China tariff is an MFN tariff. So those are the real reasons Doha didn't take off, not because, just because of obstructionism by a few countries. So the question is, can we get China interested in a bigger, more ambitious multilateral package? And the answer is yes, there are some openings. Opening number one, I would say, is the forthcoming leadership transition in China. There is a strong sense that China needs to change. The World Bank 2030 report, which Vikram Nehru authored, who's here, and if you look at the discussions in the last 3-4 months in China, a lot of it has been about internally how China needs to change. It has to open up, rebalance, open up its services sector, which is highly inefficient. So there is an opening and a perceived need for reform, which I think the rest of the world needs to test. I call this Zhurongji Redux because in some ways, I think just as China used the WTO to liberalize in its first phase of opening or second phase, maybe in the next phase too, China could use the external anchor as a possibility for opening up its economy across the board. I think the second opening is what I just mentioned. China as a trade challenge is actually shared more widely. I know for a fact that Latin America, Brazil, and India, there is a serious concern about what is emerging to be a colonial relationship with China. All these countries, including India, export raw materials, they import high value-added goods, and run huge current account deficits vis-a-vis China. So that is a challenge that's shared, and that offers some possibility for actually mustering and galvanizing a coalition vis-a-vis China. Now, I'm not saying any of this is going to be easy, but I think this is something that will have to be attempted if we're serious about pushing the multilateral agenda or indeed any trade agenda going forward. This is my last slide. So what should the new multilateral agenda should be? One practical suggestion I would have is that the US and the major traders, and I would include the EU, Japan, Brazil, India, perhaps even ASEAN, I think they need to start a WTO process with something like a new working party on new issues. What are the new issues? What's of interest to people? I think we should have a working party to explore this. I think, of course, this should be preceded by a definitive death knell for Doha, saying, Doha is undoable, doesn't deserve doing, bury the beast and get on with it. And this should be the first part of that, have a new working party for that. Second, I think it's very important what the agenda must have. The agenda must have all the pressing trade concerns vis-a-vis China. And exchange rates, and Gary has spelled out some of them very ably, exchange rates, state capitalism, government procurement, etc. The list is familiar here. But I think the other side of this is that it must be broad enough so that reciprocal bargains with China can be struck. China has to have an interest as well as an exporter. And I think there are things, for example, anti-dumping disciplines and anti-dumping countervailing, the fact that China has become a big investor overseas and is concerned about investment restrictions abroad, agricultural export restrictions, which are a concern for US, climate-related trade action, which are a concern for China. So the aim should be to come up with an agenda that both addresses the concerns that China raises for the rest of the world, but also has things that China will be interested in, so that the reciprocity dynamic that Gary rightly emphasizes, can be struck going forward. Third aspect of the agenda, I think, and I completely agree with Gary on this, but I would say this even more provocatively. I would say going forward, the agenda must proceed on the understanding of a more de-democratized WTO. It's one of the ironies, in terms of the IMF and the World Bank, we say they're not democratic and legitimate enough. But Gary is absolutely right. The single undertaking has led to a WTO that is overly democratic, gives too many countries with actually very little stake in the system. In fact, for many of these countries, they want preferences, and that's orthogonal to the interests of a trading system. So I think the understanding must be plurilateral, de-democratized process, subject to some safeguards, basic safeguards for those who are left out. So I think that's the way it should proceed. My final thought is the following. This is my message for the United States and for people in Washington, D.C. The rise of China is a reality. It's big. It makes multilateralism an existential necessity for the US and for the rest of the world. Not multilateralism as a last resort, not half-hearted multilateralism, but a muscular, convinced multilateralism. Let me end by referring to the question that a gentleman asked, said US-EU, and he said US-EU for gains from trade and, to kind of threaten China, as it were, encircle China. US-EU on the positive side. The last I heard, President Obama's objective for the United States for export growth was plus 100%, not minus 100%. EU is not exactly a dynamic economy. Second, the notion that getting together with the EU can actually, threaten China is a little bit out of touch with today's reality. It's China that has the money bags, and China can tell the EU, well, do you want to survive or not? We hold the purse strings. How much do you want? $500 billion, $1 trillion to save the Eurozone. The US does not have that ability. This is a new world. This is a world in which that old logic of the US having all the levers, EU having all the levers, is absolutely passé. So let me end by saying that in this new world, we need a strong multilateral system. But for the United States, in some ways, the mentality has to change from, needing multilateralism because, it created the multilateral system, but needing multilateralism almost because as a declining power, it needs this as a defense against a rising China. That is the fundamental mindset that has to take place in the United States. Thank you.
So, with that introduction, let me open the floor for questions to any of our speakers. We've got about a half hour before we break for lunch. So let me open the floor as to who wants to talk. Again, we've got a traveling mic. We've got a standing mic in the back. Identify yourself and fire away. Roger.
Hi. First, I want to apologize. I had turned my phone off, but somebody up there knows that I'm here, and now I can stay the whole day. So the meeting at the Senate has been called off, and this has been fantastic. We're working on the rare earth case as part of ITEC. Is that a step in the right direction, or do you think that's a distraction?
Please identify.
Oh, Roger Kabarge from the National Intelligence Council and from the Director of National Intelligence.
Who wants to answer?
Oh, well, it's clearly a step in the right direction. I mean, China is doing a lot of things which it shouldn't do, and other countries as well, and we are amongst those. And the only way to settle these is by use of the dispute settlement system. As I said, the rules are getting a little bit shaky, and in a lot of areas they don't cover the subject matter, so the appellate body has to interpolate more, and that gets more troublesome going forward. But this is not one of those cases. I mean, in rare earth, just like the previous case on other raw materials, China's completely in the wrong. They're going to put up some bogus environmental argument. They're not the only ones who do bogus arguments. The appellate body will see through that. So I congratulate the U.S. I just regret it took so long to bring it forward, but the U.S. was trying to forge a coalition on this issue and has successfully done so. I guess probably nearly everybody follows this case. But my view of the Chinese use of rare earths is as an investment strategy to get Japanese firms principally, but some European and very few U.S. firms to locate in China, so they'll have access to the rare earths for magnets and electronic products and so forth. And the problem with the dispute settlement mechanism is it takes a while to find this, and by that time to make a decision, and by that time China may have achieved its objective of getting companies to resettle. I think that's totally inappropriate.
I agree with Gary, and I think it's you know, if you look at to me what it illustrates is that, you know, multilateralism and the multilateral dispute settlement work vis-a-vis China, and we need more of that. Because think of the counterfactual. Supposing China were not part of the WTO or didn't have to adhere to these rules, and the U.S. had to prosecute this bilaterally, it may still have, you know, come to some resolution, but I think it would have been a little bit more difficult. And so that's why I think the whole, you know, the framework of multilateralism is so important for dealing with China.
Yeah, Ernie? Ernie, go to the mic, yeah.
Ernie Prieg, am I on?
Yep.
A Manufacturers Alliance. My biggest problem was with those three presentations, which one to pose a question about. But I would like to pose a question to Brad about trade and business services, which of course are more and more deeply integrated with our manufacturing sector. But I have had a difficulty getting the facts clear, and I'd like to go to Gary's paper, page 15, where he gives some very pertinent facts, because I'm not sure we're really focusing enough, and it may not look as bright as some people might feel. What we're really talking about is the two lower bars, telecommunications and business, professional, and technical services on those two charts. Exports are about $100 billion in 2010, overwhelmingly telecommunications. About 3 times exports of 30+ billion. So we do have a surplus of 70 billion, although exports in these areas just still 1/10 of manufacturers. And if you look from 2005 to 2010 in these areas, the growth is only about 25% over 5 years. It's not that clear. Also not in this chart, but on WTO figures for what they have, all other commercial services like this, in 2010, India passed Japan to be the number 3 exporter. They're really big telecommunications business services. China plus Hong Kong is bigger than India. And of the top 10, EU is first to non-members, US, but then of the other 8, 6 or 7 are Asians, and they're coming on strong. And the last question, if you have any thought on this, is it appears that offshoring jobs from the US abroad to India and those places might be even easier for telecommunications, some of these service industries, than some manufacturing. So I would like to see a closer look on 2011, 2012. How fast are our exports growing? Is our trade surplus of 70 billion going up or down these last 2 years? And how fast are India and these other Asians coming on? For a few years, they were just coming on like gangbusters. You might comments on any of this.
So I think that there's enormous opportunity for U.S. business service exporters. I think that there are, as I alluded to in my remarks, I think there are big impediments to U.S. service exporters in these large, fast-growing markets. Much bigger impediments than I think we face in manufacturing. I think that we need to, you know, as Arvind put it, half-dressed. You know, we've basically unilaterally, we've negotiated liberalization in goods where the fast-growing emerging markets have comparative advantage. We've unilaterally liberalized in services where we have comparative advantage. So we've got a problem. We've got a problem, and we need to kick down the door on services. And I think that we'd see faster growth. As I tried to point out, I think that there is a lot of demand, or should be a lot of demand, for these types of business services in these fast-growing markets. And I think that they are increasingly seeing it in their own interests to import them. You know, I just was in China for 2 weeks, and I was struck by, you know, I gave this presentation saying we need to kick down the door, and even at the government agencies, they said, yeah, that's right. We need a more dynamic services sector, and one way to do that is to liberalize. So I think that there's growing appreciation there, and I think if we can achieve increased liberalization, we'll see business services grow, exports grow. India is a peculiar case. Overall, India is not a skill-abundant place. To my reckoning, they should be producing more stuff, yet they don't. In terms of population, they're about 20% of the world's labor force. They produce about 3% of global manufacturing output. That's wrong, and that's an artifact of their regulatory regime, and that has created.
We're 5%, by the way.
Okay, 5.5%. Still way below what you would expect for a country that looks like China 20 years ago. And I think that the fact that they have strangled their manufacturing sector has created this artificial comparative advantage in services. So we get this funny thing where, they are competitive in services. If they ever liberalize their manufacturing sector, that's going to change very rapidly. And I think that will change the global landscape in manufacturing quite rapidly. And we'll all have to accommodate a new China in goods. I think, for the millions of people who live in poverty in India, that would be a good thing. But it will, require adjustment by the rest of us, probably mostly by China. So I think that, sure, high-end manufacturing will continue to do that here. But I think that pinning our hopes to a resurgence in manufacturing is a false hope. For us, as long as we remain relatively skill abundant, I think business services are our ticket.
Just to put an even sharper edge on this and give you a bumper sticker, getting the emerging markets to open up on services is a triple play for the United States. These are the world's fastest growing economies. The services sector of their economies is growing rapidly. They have big barriers in those sectors. So there's a threefold case for really putting this at the very top of the negotiating priority list. As Brad suggested, I think all four of us up here heartily agree with that. Howard.
I agree with that too. Thank you.
Good. Unanimity prevails. Howard.
Howard Rosen here at the Peterson Institute. Arvid, if you think you're the odd man out at the party, try talking about social issues to a community, to the trade community. So I feel your pain. But I have a question for you related to that, which is that on your agenda, you don't have anything on there on labor or environment. And it might be argued that, in fact, those people who have been pushing that agenda have gone further on the bilateral and regional agreements, because we've been able to put those into those agreements, than we have on the multilateral side. Maybe that's an argument against multilateralism. So did you consciously not put labor and environment on your agenda? Do you think that doing it multilaterally might be effective? Could you address those questions? Because they're key to the U.S. debate.
So my one response to that, obviously, that was, we've thought about labor and environment quite a bit. But remember, quite apart from, we can have a discussion about whether these are legitimately pursued through trade agreements or not, but that's not the discussion I want to have. But go back to what was just said by Fred, and what I call the asymmetry in mercantilist bargaining power. Almost all the big barriers now are with, in China and the emerging market world. So any reciprocity dynamic will require us to have stuff here that we can offer, China and the other emerging markets. If you're going to add labor and environment also to that agenda, the lopsidedness of that, and therefore the difficulty of achieving some successful outcome is much greater. Now, if you say, if then the United States decides these are so important that you can't have an agreement without that, then I think multilateralism and the objective of pursuing opening vis-a-vis China and the other emerging markets will be set back.
No, but Arvind, I think the question is more subtle than that. It comes back to your debate between multilateral and regional/bilateral. Is the U.S., let's assume that Howard's right and labor and environmental concerns are going to be central to U.S. trade policy concerns going forward. Can the U.S. negotiate those issues with China more successfully in a multilateral framework or a bilateral and regional framework? The U.S. has tried to inject labor and environment into the WTO in the past without much success because a lot of countries oppose it. If you go, say, through TPP, as the U.S. is now trying to do, it's at least got a running start on including some of those issues because there will be labor and environmental chapters in the TPP. Now we can say it's only 10 countries at this point. It'll probably expand to 13 soon. We'll talk about that this afternoon. But there's at least a prospect that that group will have some modicum of labor and environmental issues in the TPP stage 1. Now you legitimately say, well, will China ever sign a deal in which it was not on the ground floor? And that's a fair question. But then you've got to acknowledge that there's competitive liberalization pressure against China because if its main trading partners, almost all of whom are in TPP, exclude EU, but everybody else is in TPP, that's competitive liberalization on China. Our study that we released this afternoon shows quite considerable trade diversion losses to China from TPP of the 13, enough that they'll be concerned about it. So which alternative, in terms of practical negotiating options, is more or less likely to succeed? I think that's the operational question, not in the abstract whether you can get China to agree to labor and environment.
But Fred, I mean, this comes back to the point. Say you negotiated labor and environmental standards in the TPP. So what? If it still remains the case that the biggest barriers in terms of achieving export growth that President Obama has set for the United States, the biggest barriers are in China and other emerging markets that are not TPP. The question is, do we get opening in those markets or not? And to think that, because I think you're still in the mentality of, Mexico's outside, Brazil is out, Colombia is outside, therefore they face this pressure hugely. But China is too big. It doesn't face this pressure as much as the other countries. But supposing, Fred, I turned around and said, China says, well, I'm going to negotiate a free trade agreement within Asia with these ASEAN and other countries, and exclude the United States as a retaliation for what the US is doing on TPP and for imposing labor and environmental standards in the TPP.
Well, the flaw in that argument, Arvind, is that China is already negotiating free trade agreements throughout Asia. I mean, China, in a way, started it, if you want to put it, well, didn't start it, Carlos started it with NAFTA. But China did its ASEAN agreement over a decade ago. It's now actively negotiating with Korea. It may do trilateral with Korea and Japan. So willy-nilly, as you well know, Asia is moving toward an East Asian free trade agreement. On the study we released this afternoon, the quality of those agreements is about half that of TPP in terms of trade coverage, likely economic effect, et cetera, et cetera. Nevertheless, that is a new mega-regional trade agreement with discriminatory impact on the U.S. and others. I happen to welcome that as competitive liberalization pressure on the United States. I think that's a good thing. But you can't say China will retaliate by negotiating Asia-only agreements. It's already negotiated Asia-only agreements. Many of them are either in place or underway. Now, it could ratchet it up, it could step it up, it could improve the quality. That, I think, would actually have some merit, and that could happen, you're right. Only to say this is an ongoing dynamic in both directions with competitive liberalization pressure in both directions. The only point I want to make here in your construct is that you say quite rightly the U.S. faces some trade-offs and some dilemmas. Absolutely right. My point, compared to your kind of putting China as the uber power that doesn't have to worry about such trivialities, China also has trade-offs. If it faces a successful TPP of the 13, let's throw in Japan and Korea to make it more meaningful, then it's got some significant trade diversion losses. And I presume, like any rational actor, China will want to overcome that. There are a couple ways to do it. It could flat out retaliate and try to bludgeon its way in, and you might argue that's its best course. Or instead of fighting them, it could join them and try to join the TPP, having then to stomach some things it doesn't like on IPR and state-owned enterprises, not to mention labor and environment. But I think, as you know, I take a high percentage of your case about China's dominance and the need to accommodate it and find a way to integrate it into the global system. But in terms of how one does that, I think one has to look at it through the Chinese lens, see that they too face trade-offs. They will face costs and losses that will damage their national interests as they define it from a regional approach that leaves them out. And indeed, they're miffed about that now, as you know, and that's one reason, because they see losses to them coming from it. So that, it seems to me, is the real-world practical context in which they will have to figure out how they respond, and how we, trying to analyze the dynamic, need to see it.
Yeah, but Fred, I agree with everything you said, except that I think one thing to be added to this is that, you know, in this rest of the world China equation, remember what you've left out is if you had more heft on the negotiating table on the other side, you could actually get more rules on exchange rates where there's a common concern, more rules on government procurement, because you can do the reciprocity with China that you cannot do with a China in a TPP, especially one that's been signed without China. That's point number one. Point number two is that, related to that, is the incentives for China to liberalize will be greater when it's done in a multilateral context for precisely the rare earths example. You know, China, the Indian Prime Minister makes this point very well. He says the biggest, in some ways, weapon that the world has against China is the opprobrium that China feels of being seen as a deviant from multilateral norms. And therefore, you know, that's the other side of the picture, regardless of what happens on the regional in terms of leaving competitive liberalizing thing. I think there's a whole additional multilateral dimension vis-a-vis China that I think improves the prospects for liberalization from China, adherence to rules, and so on.
I agree with your point number two. On your point number one, using the broadest global coalition to help lever China, the trade-off there, of course, is getting the rest of that global coalition to go along with you. Because as we know, there are a lot of other countries than China in the WTO who are not really keen to put an exchange rate chapter in there because they manipulate too. So again, it's a trade-off. Can we get a TPP alliance, admittedly with less heft than a WTO alliance, but maybe more alliable in terms of getting common views to go against China? But that's our research agenda for the future, and I don't want to reprise our in-house debate any further. So Welby and then Carla.
Are we allowed to applaud that serve and volley tour de force? That was impressive.
We put it on video all the time.
Welby Lyman from Ways and Means. What's the manner in which we convince other countries that have not done as much services liberalization as we have to liberalize? I hear Hufbauer and Jensen make out the case that services liberalization is beneficial both for us and for countries that may join us in this less than reciprocal trading of services liberalization. I hear Subramanian saying, no, actually you need to combine this, you're saying specifically with China, but with, you know, AVCVD liberalization or new investment rules and so forth. So maybe if you can suss that out a little bit in one particular context, have we reached the point at which the traditional manner in which we negotiate, in which we trade off normally relatively reciprocal types of bargains, have we reached the point at which that is less effective than it used to be, in part because the key countries do not have the civil society development that allows domestic interests, in particular consumers and the dynamic elements of their economy that are outward looking, to demand it in the way that it was demanded here? In which case, do we need to have the same investment in, let's say, a foreign commercial service and states' economic statecraft that we invest in the sort of very high personnel standards at USTR?
Okay, Brad's been working the case in China recently, as he said. Why don't you elaborate, and then other colleagues weigh in.
So I think that this is a difficult issue, and you could hope that these large emerging markets will see it in their interests to liberalize. I think, thought leaders in China recognize that they have benefited enormously from the liberalization that they've done in goods. By allowing imports at low tariffs and allowing foreign direct investment in manufacturing, they have propelled rapid growth in China. I think that there is increasing realization that similar liberalization in the services sector, in finance, in telecommunications, in other types of business services, which are key intermediate inputs to goods production and delivery, there's growing recognition that they need a dynamic business services sector to support their move up the value chain in manufacturing. What distinguishes commodity goods from high value added goods? It's the kinds of design activities, testing activities, marketing, branding, all the types of things that are business services. You need key business services, logistics. All these things they see as needing to propel the advancement of their goods producers. So I think there's growing realization there. How you do it within a mercantilist negotiating mentality is difficult because we have given a lot away. We haven't given it all away. I mean, services aren't, ask any attorney, it's hard to practice in 2 states without passing the bar. So there still is a little bit on the table, but not as much as they have. So, what the dynamic is, I guess I think that trying to engage some of the medium-sized economies that have nascent business service sectors to engage on an international services agreement and create trade diversion would create, the incentive for competitive liberalization. But I am not a trade policy strategist, so that's, kind of a 30,000-foot view.
Gary, you are.
Yeah.
The answer.
Let me come down to 100 feet. The reality in many services is that they are controlled, the markets are controlled by relatively small groups, oligopolies, monopolies, very comfortable groups in most countries. And the markets are not transparent, the licensing procedures and so forth are quite opaque. The contribution to the political system is quite strong. So the resistance to liberalization is enormous, as Brad has emphasized. And so it is going to be a fight all along the way. But there are some things we can do. We are relatively open, as the Matu chart showed, and we've shown in some of our publications. But let me draw your attention to areas where we are, while we may be relatively open, we are still quite closed. And these are difficult areas, and these are what other countries are going to want in the serious negotiation going forward. Let's start with air transport, where civil aviation, where we've had laws since the 1920s which prohibit foreign control of U.S. carriers. And that's still there. It's a big issue with Europe because Lufthansa could come in and buy some carriers, and others, Singapore Airlines perhaps, and so forth. Now that's a tough one, and many administrations have looked at it, have gone to the brink, have pulled back. But that is one that will be on the table, and closely tied to that are slot allotments in major airports. Most airports, by number, there's no problem on slots, but there are about 100 airports in the world where slot allotment is everything, starting with Heathrow, but it's true at Kennedy, it's true at Chicago, it's true at Atlanta, and so on. Now the slot allotment, how does that go? That's grandfathered in. There's not much of an auction system. Well, of course the grandfathered parties love it. That will be on the table if we're serious about liberalizing services in just that one sector. Let me jump to another one, education. You don't have to go any further than outside this building, and you know that the educational system in this country is monopolized by the teachers union. Very difficult to have competition in that. Technology is breaking that down through distance learning at all levels. Now, distance learning is not readily accepted in terms of certification and so forth, not only in this country, but every place. And that's a big part. I see a lot of people here who look relatively young, who probably have kids in college, and you know it's $40,000 to $50,000 a year. And that's a pretty...
Worth every penny.
Yeah, worth every penny at Georgetown. Anyway, that's a market which is highly controlled in most countries, and you can run it right across health. Now, the U.S. can, would be asked to liberalize some of these. Probably the most difficult are state regulations, and Brad just alluded to some of them, on all these licensing requirements, professional requirements, and so forth, which make it very difficult to come in, but also state procurement of services. State procurement of services. Obviously, the federal government as well, and the federal government is fairly able to liberalize its own, though there will be a lot of resistance for the reason I said. But at the state level, we have a huge difficulty in this country cajoling the states to liberalize. We've done it in some areas, in insurance and a couple of areas, but that will be on the table. So there's stuff we have on the table, but I'm not saying any of it's going to be easy to liberalize going forward, plus all the difficulties that Brad alluded to abroad.
And Gary didn't even mention the Jones Act or state regulation of the insurance industry, just to mention a couple of traditional biggies that are out there. Final question before lunch, Ambassador Hills.
Actually, the preceding question sort of focused on what I wanted to say, but let me say something else on the TPP. It is astounding that it takes 6 months to agree that Mexico can join. And isn't the problem that the 9 parties are creating actually obstacles to newcomers coming in? And were the TPP planted in the WTO, the negotiation proceeding, with a welcome sign on the door saying anyone can join who's willing to meet the hurdle rate tomorrow, the next day, or a year down the road? Wouldn't that really make the TPP have much more heft and much less anti-China sentiment? And let me just say that I think, Arvind, all the presentations were terrific, but the anti-China feeling with respect to services, I don't think is as strong as you think it is, because China recognizes that if they don't liberalize services, they do not move up the value line. Manufacturing today is no longer manufacturing. It requires services, and competition is necessary to make the services sector more efficient.
Okay, Arvind, you get a final word, and then we're going to break for lunch.
So, Carla, you said it very well, because I think 2 final points. I think the difference between a large TPP and what I call a de-democratized WTO, that's actually, the difference is very small. It's actually only a few big traders, Europe, India, Brazil. So you're, saying TPP, anyone welcome to join, but it should be at the starting point, at the very beginning, so that agenda formulation. Exactly, and that I would, I think that's the way these two come together. And your second point, in fact, is very important and relates to the previous question as well. I think, when someone asked, how will China liberalize the services sector? The answer is a combination of the reciprocity dynamic, plus, as you said, the feeling within that, this is good for ourselves. It's that combination that works. There will be, take China or India, lots of obstacles to reform, but also lots of voices in favor of reform. And what the reciprocity mechanism does, like we saw in 1934 in the United States, is that tilts that a little bit in favor of the liberalizing interest because it can offset the resistance from the import competing interests. So it's that combination of internal willingness, which is why I think the leadership change in China coming forward is a crucial time to actually test China's commitment to multilateralism and test our own willingness to test China's multilateralism.
Yeah, on this question of open regionalism that Carla raises both in principle and now in TPP, Jeff Schott will address that this afternoon in talking about the potential expansion of the TPP.